Hello everybody and welcome back. Today I want to talk about Texas Pacific Land TPL because the stock is dropping. The company recently reported some good earnings and the stock went up immensely, 10% in one day and then go back down. Now the valuation is starting to be appealing because revenue is going up, net income is going up, free cash flow is going up, and the stock is going nowhere. So in terms of valuation, we are getting cheaper. So in this video, I want to talk about the latest earnings report. I want to talk about the valuation and I want to talk about the price target. At what price do I want to buy TPL? Full disclosure, this is not the first time I'm buying TPL. I first bought TPL in November 2020 and I sold at the absolute top in November 2024. So it's an 8x. And now the stock has dropped and dropped and dropped. So in this video, you will have at what price I'm a buyer. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. Thanks to TPL. Frankly, thanks to TPL. It has been my best investment ever. And I'm very happy I sold at this moment because I sold because the valuation was way too expensive. The PE ratio was 70, 80, and I didn't like this at all. And I remember vividly at the time when I sold, 1 year ago, November 2024, people did not understand why I sold. People said that the business would improve, you would have data centers on their lands, and you have a different way to value TPL. You have to take into account the lens, so asset-based value, and see where we are now. So in case you don't know TPL, it's a very simple company. This is a company that owns lands in Texas, 900,000 acres of lands in Texas. And on these lands, you have some oil. And if you want to drill this oil, you have to pay a royalty to Texas Pacific Land. Okay, so you have the majority of the revenues that are coming from oil. You have also a little bit of water and a little bit of something else, but that's very minimal. What moves the stock price is oil. And what is really interesting for TPL is, let me put the website in English. The price of oil is going down. If you look at the crude oil price, we are on a downtrend, right? So almost, every year the price of oil is going down. But at the same time, if you look at the revenue for TPL, the revenue is going up. So very intriguing to see this. And you have two ways of making more revenue if you are TPL. Either the price of oil goes up, so as a royalty company, you will benefit from this situation, or you pump more. You drill more volumes. Well, for TPL, despite a declining oil price, they have increased the production, increased the volume of oil that is getting drilled on their lands, which means the revenue is going up and to the right. Next question for you. What do you think will happen when oil prices, for some reason, will go up? We are living in a world that is very complex. You don't know where the next shock will come from, but oil prices will fluctuate. And that means that can go down a lot, but also up a lot. See what happened in 2022, right? So this is the price of oil. You are very down a lot. There is a scenario where in the next, year, 2 years, 3 years, the price of oil goes up. And this is the only thing you need to understand to see the future for TPL, the potential for TPL. If the price of oil goes up meaningfully, TPL will print free cash flow, and the apparent valuation that is expensive right now will not be expensive at all. Okay? So revenue is trending up. For the latest earnings report, this is still fine, still increasing the volumes for oil, for water. If you look at the net income, still up and to the right. Nothing ever happens for TPL. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. The only thing that is changing right now is they are doing acquisitions. Look at this. Very recently, and for the first time ever, TPL took some debt to have acquisitions, to do acquisitions. So if you scroll down on this website, you see that this is a company that is famous for having no debt at all. For the first time ever, they will take some debt. Fair enough. You will see if they use completely the debt, or they postpone the debt. Anyway, this is a little bit too early to judge the capital allocation decision so far. We will see if they use the majority of this debt or not. Anyway, revenue is fine, net income is fine, free cash flow is fine, and the stock is dropping. And because the stock is dropping, if you look at the PE ratio or price to free cash flow, where can I see? PE ratio, can I look at the forward PE ratio, forward price to free cash flow? I'm on Fiscalia right now. Okay, this is your forward PE ratio. That can work. Okay, so because the stock is going down, the valuation is going down. I first bought TPL at a forward PE ratio of 18-20, and I sold when the forward PE ratio was 78. So it was a good run, and the fundamentals improved, and you had the multiples that increased, and you had a re-rating from a forward PE ratio of 70 to now 36. Next question, do you think this is expensive or not? Do you think this is cheap or not? What do you think the growth rate will be for TPL in the future? I see some people arguing TPL will have a growth rate of 20% per year. That's a little bit too optimistic in my opinion. But you can argue this is a business that can grow 10 to 15% per year, right? If you think oil prices will stay the same. And if you think the earnings of this business can grow at 10 to 15%, if you put everything in a DCF, a discounted cash flow model, this is what you have. I'm using a wonderful website called Stock Unlock. You have a Black Friday event if you want to get it cheaper. So you can use the link in my description to register. It's a wonderful website. If you think the earnings can grow at 15% per year, no buybacks, no increase in dividends, and if you think they deserve a PE ratio of 30, then the business has a fair value at $800. And now, what is the stock price right now? A little bit more. We are just below $900. Okay? This is what you have, $870. So you need the stock price to drop a little bit, 9%, but we are around fair value. And if you buy right now, you can expect a CAGR of 8% per year. Not that great. So to answer the question, is it cheap now? No, not cheap at all. This is your forward PE ratio. Now it's at 36. I don't think it's cheap enough. I would wait for a forward PE ratio of 30 or below. And we were at this ratio 1.5 years ago. So it can come down. Now people are a little bit delusional when it comes to TPL because the valuation has been very high, very expensive. So there is a plateau and people are short-term oriented. So they think TPL is a premium business that deserves a premium valuation. I'm telling you, sentiment will change eventually because as a reminder, I bought at a forward PE ratio of 20. It can happen. So if you compare 20 to now 36, you are expensive. So TPL is still expensive today. You have a few things that can change this, by the way. If oil prices go up meaningfully, TPL is no longer expensive. So first point. Second point, if it turns out that they are welcoming data centers on their lands, you will get a new revenue stream and the premium valuation will be rewarded. I mean, if TPL turns out to be a data center ecosystem company, then it's okay to pay a premium valuation because the future will be so bright. Now, you don't have these two elements. You have rumors of data centers and you have a low oil price. So it is expensive. What would be the earnings growth estimates if you want to buy now? I mean, if you want to buy now at almost $900, what would be the good growth rate so that it's a good buy? If you think the earnings will grow at 20% per year, then we are at fair value and you can expect a CAGR of 12% per year. Even this is not that enticing actually. So you are looking at a bullish scenario and the expected returns if you buy now is 12% per year. So it's not great. I see much better opportunities. But maybe if the business grows 20% per year, it deserves a premium valuation, so a PE ratio of 35. If you think the business can grow earnings at 20% per year and it deserves a PE ratio of 35, then you can expect a CAGR of 15-16%. Now we are talking. But I don't think the business can generate this amount of growth. It will be a little bit optimistic, I would say. That means, what would be the stock price for the PE ratio to be below 30? You need to go from 36 to 30, so that's 5 6, 5 out of 6. 1/6 is 16%. So you need this to be below 16%. So 176 times 0.84, which means you need a stock price of $730. Okay, fair enough. So my target price, the moment the price I will start buying TPL again, starting the position, right? Not buying a full position, but starting buying again, should be $730. If it's below this, I will buy more. And I can do several tranches. I can buy at 730. I can buy a little bit below, to have a very decent size position in my portfolio. I would not mind building up the position over a few quarters to make it a core holding, like a 10% allocation in my portfolio. When I bought in 2020, it was a huge position and I made a fortune out of the stock. So I've been following the story for more than 5 years now. I know the potential that this company has. It's just that now it's a little bit too expensive. So yeah, maybe if it drops 15-20% per year, I will be a big buyer, but not now. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.